Okay, woke up a little bit late. Not giving myself enough time to mark up my charts in preparation for the 8:30. So it's taken me about 45 minutes. I must do this a little bit quicker, or try and get up a bit earlier, because now we're staring down the barrel of 8:30 news drivers, and without making that mistake I did yesterday, I am on the correct calendar week. So today, Wednesday, unemployment claims, durable goods coming out at 8:30. However, tomorrow is a bank holiday. So will price move quickly or substantially, or just consolidate until next week? Because we're looking at next week. Here we go. Next week seems to be an awful lot of news coming out. Non-farm on Wednesday. Monday might be a good day. Okay, so let's make sure I select the correct week. Don't make the same mistake, please. Okay. Right, looking at weekly, daily. Let's start with the dollar. Weekly, well, has tapped the monthly high and also three weekly, prior weekly high, closed below, coming back down into up close candles. Will it continue to drop lower, as this might be a swing high? We have sell side here, here, running all the way down to this swing low. This is the pink fib is a monthly fib on a discount wick. Could it run deeper into this? Certainly a large movement, isn't it? Dollar down to 95. 98 is a key level on Forex, and 95. So when we look at the daily, the 20-day look back has moved from this low here up to this low, where there's relative equal lows, because that is the 20th day. So we take the lowest low and the highest high within that range. As you can see, price has come into the daily gap, crossed over the 50%, closed at the 75% level, lower quadrant, and come into this this open, nearly touched the open, but then retraced. Could we see maybe today a rise up to the halfway mark and then continue going lower, or just literally shoot down for these lows, making risk on for the Nasdaq? Nasdaq yesterday, we anticipated it hitting the high of this up close candle, and now we've opened. We haven't reached into half of this body, and we're continually moving up. Could we take these relative equal highs and tap into the daily fair value gap here, and relatively equal highs up here with another daily fair value gap? So I think risk on. So daily bias is bullish. We have reached a new week opening gap. It's quite a small new week opening gap here. This was the most recent This is 2 weeks ago. This one is 4 weeks ago. It's been graded out. Had reached into it last week, up to the upper quadrant, but has left a portion still left open. We've tapped into it slightly here, come back into an hourly fair value gap here, and then I've graded this. This is a 15-minute premium wick, come down into the upper quadrant and respected that. So could we be pushing higher, taking these highs and further into the new week opening gap? And I believe, as I pointed out, beginning of this week or Sunday, we still have this opening range which hasn't been filled. Up above that we have relative equal highs, or is it just relative equal highs and another daily fair value gap, and then the monthly high higher up. So if we're looking for higher prices, regular trading hours, high and low, has been taken. This is a 15-minute fair value gap. Bodies are respected the higher quadrant, caused to swing low, and price could be taking these highs. Could I look for an entry if I'm looking to be bullish on the day? Well, if it doesn't take this high and retraces back into somewhere here, then maybe I could be looking at an entry. Or if it does take this high and looks to come back, maybe if it's the right time, I can take a contrarian trade to run back into its range. Could it form an optimal trade entry coming down into here, between 62 and 79%? Maybe reacting off this new week opening gap. I must have a look for where the original this week's new week opening gap is. Not too clear. Probably down here. Let's have a look. All right, don't be shocked. No, it's opening range. What we're doing. Here we go. Yeah, that's what I thought. Small portion left open down here. Could this be a buy, make a sell model? Accumulation, second accumulation. Could it take this high to give a low risk buy and then drop heavily? That's something to look out for. Okay, right, so that's my daily bias. Bullish on the Nasdaq, short-term bullish on the Nasdaq, and they're consolidating around the 50% level on the 20-day look back on the dollar, and possibly lower. So I'll come back for a further journal entry, or at least by the 8:30, which is already past. Didn't even notice. There you go. Been rambling on and missed the important timing. So we'll stay on. Let's have a look. 8:30. Let's make sure this is refreshed. There you go. Pretty lackluster, isn't it? 8:30. So maybe this is a long-term high. Could be an intermediate high if this takes it, falls short at the rejection block, but it's looking to retrace. Now that we've hit the 830, I'll take off the midnight opening range fibs and deviations and just select the first presented fair value gap after the midnight open, which is this one here. Okay. So this could be a mitigation block. Looking on the 5 minute, we're looking for any decoupling. As you can see, we've had a reaction around the 50%. Fairly strong movement. Could it be reaching for the $1 and then continue going low? S&P is looking a little bit oh no, it's looking similar, I think. Remember our daily bias. Daily bias being bullish. So that being the case, look at the Dow. Looks awful, doesn't it? How could anyone trade the Dow? Okay. So, interesting to note, it's reacted off the midnight first presented. Dollar is dropping, taking its lows. It's dropping out its consolidation. Dollar looks like it's going to take its highs, break out of its consolidation. So as a just have to keep an eye on this. I think earlier on the week I wanted to maybe take a short around the 75% level, but I don't think that's going to be applicable. I must stick to my daily bias for successful trades, unless I want to take small risk and trade in the opposite direction. So that's a note to myself: reduce the risk if going against daily bias. And of course, you know, it can be wrong with the daily bias. It's no exact science. Okay. Are we going to take this high? doing up there? Come on. Right. Another note to myself, get a spare mouse. I think this is a wireless mouse. I think it's giving up the ghost. So I must have a spare. If I lose my mouse and I'm in a trade, I wouldn't know the shortcut keys to cancel it. So that would be a bit of a panic if it was going the wrong direction. Imagine it, I put a trade on, mouse dies, and I don't put stop loss on. Not a happy day. So it would be interesting to see where this 931 first presented gap is. How old is that? I could start highlight when I put them in, put the actual dates in. This is why have I got those on? Executions off. Let's get rid of this new week opening gaps. Becoming a bit of a headache. Keep the most recent ones on. That's a bit better, isn't it? So it's in between. Okay, so that new week, that first presented gap, 20th of November. So Thursday last week. Pretty relevant. New day opening gaps. That's today's. Had a nice little reaction off that there. Yesterday, sorry, in the evening. Okay. London open. 7 o'clock low. 7 o'clock high. Nothing really obvious at the minute. If we look at this price action, the only thing that's of interest is it dropped down into first presented midnight open gap. Now it's balancing itself out on this first presented on last week on Thursday. This was a buy, make, a sell model. Is this the second accumulation? Does it need two? So 1, 2, and then takes this to then come back down and then find an entry above this major high. It could be next week. She's a tricky mistress. Thankfully the wife isn't here today, only because she does distract me. Yesterday my video went quiet because I had to go and collect the children, do the school run. Today I'm left on my own. Set my alarm, snoozed it, stayed in for another 2 hours. Well, must have been tired. Okay, 42 past, 43 past. Haven't taken that high. So could we be dropping down into this new week opening gap again? Order block over the new week opening gap, and then we have a 4-minute fair value gap here. We're looking down the time frames, still a fair value gap here, still one here, and if we look on the 1 minute, wick down, close above for an entry. Okay. This first presented midnight opening gap is piquing my interest. Okay, low taken, high taken, or by a wick, body stay below. Could this be an entry into dropping down lower? How big is this gap? Relatively within our stop loss management. Let's see how high this gets into it. Let's drop down into the 30-second. If it hits here, I think I'll take a sell. Yeah. Oh, missed it. And then just take the stop loss up here. No, I think it's going to be, how high is this? 215, that's not too bad. Took it at the wrong time. Now I said to myself, as soon as I felt like I took the wrong trade, I didn't consider the time. I should have considered the first macro. So what did I say I should do? Let's close some of it. It's going to take it before I even do it, so let it take its stop and learn from it. There you go. So my mistake there. Took the trade, thought I saw possible entry on the 30-second. I should have waited for this 1 minute candle to close, and as it closed over the 50%, I should have aborted the idea. But I didn't take into consideration the time. And even the 30-second should have just waited for this candle to have painted. And I didn't want to put my stop loss all the way up here. That would have been a $500 stop loss. So, and also, we still got the 9:30 open. I should have just watched this to see how it reacted. And then if it did come back down to take these relative equal lows, see what it had left in its wake to maybe have then come up to and then continue to drop. Okay. All right, now that I've taken a loss today, I will see all that hard work wiped out in just one silly trade. Yeah. So I must remember, think about the loss. I think I rushed myself into that trade. The feeling that I had was a little bit of, I felt uneasy. I didn't feel 100% confident. So recognize that feeling and just hold fire on clicking. Yeah. Okay. So if I was to take another trade today, I would trade half of my risk that I would normally do, and then as soon as I've made up $115, close the trade. Whether it's going in the right direction and it looks like it's going strong, condition myself to half the risk, half the profit. And then going forward, next week the loss is less. Okay, right, I'm just going to hang around here until the first macro just to see what could have happened, and I will not take a trade. I will not take a trade. So should I put my stop loss up here? It's the 1 minute. No, I would have put it possibly on this high here, so I would have been stopped out at a even bigger risk or bigger loss. Sorry. I think I was drawn into the fact that this first presented fair value gap, it was hanging around it, and the entry was below it. So I was hoping maybe the price would be kept down by this. But if I look at the higher time frame, look at the 5 minute. Did I look at the 5 minute? No, I didn't. I didn't look at the 5 minute, and if I had done, I would have seen, look at this mess. Okay. So 3 reasons why I shouldn't have got in that trade. So, plan of action. Before I put the trade on, is it the right time? No. Look at the 5 minute. Does it look messy like this? Yes. And thirdly, what is the risk? Okay. So, silly boy. But learn from it. This is what it is all about. This journaling is what it's all about. So then tonight, when I'm quiet, have half an hour to listen to whilst I'm on YouTube. Just grab my channel and listen to what I've said and see if my bias pans out. Definitely feel like this is a good thing to do. Don't have time to journal, writing journals out on every time frame, as well as trading, as well as working, as well as being, doing the right thing for the family. I can't let this this trading just suck the lifeblood out of me, and then kids only seeing me upstairs on my charts. I mean, whilst they're doing their own thing, that's when I tend to be up here and having a hoot. But I wouldn't be very happy if this was real money, would I? This is the sense of sort of false sense of security, isn't it, with the demo account? You can make a loss and be more objective. But next year is the time. Next year is the time to put my money where my mouth is and start trading live funds. So again, think about the calendar. Bank holiday tomorrow. We've had a large range day yesterday, up into the 50% premium wick, daily wick. I think, and this trade was going contrary to my bullish sentiment, so I should have risked less. I said to myself, risk less. Micros, if we're going against our daily bias. Did I do it? No. So that's the fourth reason. I shouldn't have taken the trade, and if I had done, should have reduced the risk right down. So instead of 230, it would have been 115. $115, and with my risk tolerance being 2.5% of a 10,000 account, we're nearly at 20,000. So 1.5% is a good risk tolerance. So 853. You see in the macro, if I was looking at the macro only, there would have been nothing for me to take. 849. 849. This is a little swing low there, and this is at 851. So if I was looking to trade lower, definitely wouldn't have done that. I could have then put a trade on for going higher. So do you know what? Let's just take loads off and let's see if we get an immediate rebalance. We're above the 931. Just for kicks and giggles. Eighteen seconds. Right, 5 minute. 5 minute. Not looking good. No, I'm not going to do it. No, not going to be suckered in on a messy chart like this. Fifth reason, did I look at the coupling on the 5 minute? No. So that was just such a terrible trade. I deserved to have lost. Absolutely deserved to lose on that one. 5 reasons why I shouldn't have taken that trade. Obviously don't beat myself up about it on the journal, but I'm pleased I'm thinking like this, because I would never have done this otherwise. Speaking my mind because you don't write it down as you're trading, so this is quite fresh, it's in my mind. So this is a great medium for journaling, it really is. You're going to learn a lot from this, especially when I listen to it tonight. Okay, I'm going to wait till 10 past. I'm going to pause the video and come back, I think, at the 9:30 open. Okay, so I've seen it break out. I've taken a trade. Very low. I've taken this trade where it's dropped in the fair value gap, and then there's this high here to denote a good fair value gap, and also try to hit the immediate rebalance there. So what did I say? If it makes any money, $150 is what I'm looking to make up for the loss. But I know these types of trades, I mean, such a small stop loss it really is. It could easily come back down and take these lows easily. So there you go. So let's see if it respects it. The little volume imbalance there. I'm not going to be bothered if it takes it out. No. It was a risk. But a small one. Okay, so could it drop down into this fair value gap here? Take out this low and then continue higher. But this is considerable displacement. Look on the 30-second, taking the highs. Would I take a trader to go lower again? Let's wait for this candle to paint. Dollar's going high, euro's going lower, so I've checked that. 5 minute. Okay, although it's looking messy, it has taken a high. And stopped at, there we go, I've missed that. So nothing on the 1 minute. Could be coming back down to sweep this low. Not left anything on the 1 minute really. If it does, could it leave a fair value gap? No, because it'll be on the low of 50%. Going against my daily bias. It's still before 9:30. It could literally just take these lows and bang around here until the open. Okay. So I've taken my second trade at half my risk. So that's it, I'm done for the day. Should have waited till the 9:30. Impulsive, there you go. I recognise I'm being impulsive. Anyway, let's watch this. On the 30-second, it could have been a entry to the highs, relatively equal highs, come back down into drop lower. But this, I think this 9:31 first presented fair value gap is clouding my judgment, just because the way it looks like it's nearly not quite here. Maybe I'm seeing something that I shouldn't. Maybe I'm seeing something I want to see, should I say. Okay. Nothing obvious. Didn't take these lows. Could it be coming up and then come back down again? Displacement. Nothing on the 1 minute to trade off on. If I was going to trade, which I'm not. Remember, the 5 minute is not looking happy. Okay, I'll come back 9:30. Okay, 9:31. Taking the high, gone into consequent encroachment of the new week opening gap. No first presented fair value gap as yet. Let's just see what the opening range is. Okay, opening range. Yet to fill it, even come close. Let's see how far it goes up into this new week opening gap. As we said, there's above that new week opening gap, we've got a daily fair value gap and also an untouched older opening range gap above that. Looking at the 5 minute, I think the 5 minute will be the best chart here to get an idea of how candles close around the 50% mark. If it reaches that high, then to continue. I've got a 5 minute on the other chart. Dollar's reached into a daily fair value gap. I didn't notice that before. So now, sorry, 4 hourly fair value gap. And starting to retrace downwards. Dow showing strength, as well as the S&P and index, Nasdaq 100. Okay, so we've seen displacement. Will this become a first presented fair value gap? Yes. Going into the opening range. Got that set out correctly. Taken a low, left this low, come into this order block and 1 minute value gap. I think I'm going to get rid of this. So, failed to reach the 50%. This new week opening gap seems to have been respected. Look at this wick here. Reaches into it. That's a possible trade with low risk. Oh, actually, no. High risk. In the sense of my stop loss being quite large. Five minute looks trashy. So let's see what happens here. At 9:40, not even into the first macro. S&P 500 and the Dow still having strength. (30-second). Around the low of the new week opening gap. This be a swing high within the fair value gap. Body closed there, body closed higher. I prefer to see it the other way around. Low. Well, actually, no. If we look at the bodies are higher than this one here. So essentially it's swept the bodies, respected the wick. Could this come up? No, nothing in here that I like. So there's only there is some divergence on the daily. The S&P 500. So we can see these highs have yet to been taken on the Nasdaq. They've been taken by the S&P 500. We're now looking small gap here on the daily, but my daily bias was bullish. Once more into the first presented. See how this candle closes. Can it use an inversion for higher prices? Five-minute looking unstructured. Look at the 4-minute. 3, 2. High. 260. High. 260. Relative equal highs. Could this be an order block? Close below. First presented. Small gap. Order block. Daily S&P reaching into its consequent encroachment of the daily gap. Closed. Will it take it, come back into? Yeah, this candle closes. Order flow is looking to be respected on the 30-second. 30 seconds left, the 1 minute. Taking relative equal highs. Dow showing no sign of slowing on the uptrend. Okay, just under 2 minutes before the first macro. Closed above. Will we see it drop back into? This candle drops down, wicks into this order block and gap. It closes above. That could be a possible trade to go higher with consideration of the daily bias being bullish. So we've reached into first quadrant of the opening range. Mouse is playing up. Uh-oh. Up to the rejection block. Now, because my second trade was only $30, I'm still going to treat it as I've only taken one trade up to the 50%. So it didn't pull back, give me anything to enter on. We're into the macro. So what am I thinking about the price that we're looking at now? A lot of backwards and forwards. overlapping candles. I mean, this is the smallest of gaps. You know, a few handles with a swing high next to it. Would I want a chance? Right, I said if this wicks down into it and closes above, come into the order block, hit the top of the opening range, which is near the low of the first presented fair value gap. If that closed above, then maybe we can see higher prices. Now on the 30-second, we see the gap with an order block which is tapped into. Six, 5, 4, 3, 2, 1. Let's have a look. Okay, closed above. Let's see where it goes now. Well, would like to have seen more movement on the upside. Left a volume imbalance there. And this is the low of the new week opening gap. Again, come up to consequent encroachment, close below it. Eight seconds. Okay. Five-minute looking horrific. Tomorrow's a bank holiday. We just had a large range day yesterday, sorry. The new week opening gap is below us. This one is 3 weeks old. We're still within the first presented fair value gap. And we have a opening a value gap ahead of us, above us. This closes above, we could maybe see prices go higher, could take it as an inversion. Closes lower, which it has done, could be reaching further into this opening range. Now, this is the new week opening gap below us. If we come below it, maybe we're reaching down further into the new week opening gap, which is 2 weeks old. You can tell that by the size of the line. If it was 4, that means it's this week's. 3, week before. 2, 3 weeks. 1, 4 weeks. I know. So we're in the macro. When did the macro start? Here, taking the high. So let's look at order flow. Up close candle. Low of the first presented. Would be nice if we could see some sort of market structure with some PD arrays on the 5-minute to be more confident in taking a trade. value gap here at the low of the first presented, the swing low adjacent to it, created relative equal lows here. Could this be a very messy breaker as it's taken a high? So it's taken the 2 o'clock high, 2 in the morning high, taken it, created a high, low, higher high. Could this be a breaker of some description? Best entries are in the top half. Will be a very messy one. So we're at the halfway mark between the two new week opening gaps. Didn't run into that fair value gap. We're now running into opening range, and it's after 30 minutes. Oh, I need a personal needs break. I can't hold it any longer, so I'll come back. Okay, back again. Right, we've reached the lower new week opening gap. So on the 5 minute or 4 minute at least, we're seeing big displacement after high taken, low taken. So low taken, high taken. Could this create a big fair value gap? It's quite a few handles, isn't it? Nearly 40 handles. So on the 30-second, we have an order block. Oh. Strength in the euro has taken the high here, but not taken the low on the dollar. So could this be a stop hunt for lower prices, meaning lower, possibly on the Nasdaq and S&P? Hasn't taken a low on the Dow, has on the 500, S&P 500, Nasdaq. Bit of a mixed bag. Okay. Up into an order block, the value gap, but above the 50% between the two new week opening gaps. So value gap below and above. So with a 50-50 like that, you can't take a trade, can you? Because it can either be hitting this value gap to go lower or hitting this value gap to go higher. And we've already taken a high, but rejected off the 50% in the new week opening gap. So would that mean this one is more applicable? Or more relevant, shall I say? on the 4-minute gap. Five-minute chart, candle will close in the next 10 seconds. Still in the first macro. So the first presented fair value gap, gone through it, balanced it, come out, hit it and come lower. I think if it was to go lower, I'd like to see how I treat this new week opening gap and also this 15-minute fair value gap. And then we have an hourly premium wick graded in the yellow. Three minutes left of the macro. And then we're into silver bullet territory. Okay. Get a couple more minutes and then I'll stop the recording, and then if I feel like anything's relevant, I will restart the recording. So if I hadn't have taken that trade earlier, $40, not 30. Okay, back again. Just come above a 5-minute fair value gap. I'm going to see if I can get an entry in here to go higher. We're respecting this fair value gap here with the 50% range. Could be chasing price, but just want to see how this candle closes. I'm going to enter here and put my stop loss at the next low. My microphone's dying, the battery. Great, so I've been talking, nothing to be heard. Fantastic. Okay, now back at nearly 13:30. Just realised my previous recording, the microphone I had ran out of battery, which is a shame because I had some good market analysis. But just revisiting what's transpired since the market open. So made some losing trades, you can see here, and then made a trade, I believe, on the 32nd, and then cut my losses as soon as we came up to the top of this 931 first presented fair value gap. Could there have been anything else I could have capitalised on? Well, if I had put an entry on this 4-minute gap, I would have likely put my stop loss at this low, so I would have been stopped out. So I highly would have been unlikely that, or I would not have made a winning trade on this up move. However, I can be confident in the fact that I was correct on daily bias. I was expecting higher price ranges, and I did highlight this new week opening gap into the daily fair value gap, and then this is the weekly high that I was aiming for. So that being said, although I made a loss today, I managed to reduce my contracts after the initial loss, so from 10 down to 5, and then try to make back half of my loss, which I did. So that's in line with my model. If I do make a losing trade, I can make a second trade later on, and trade half of what I would normally trade, so 5 contracts, and then try and make up half of the loss. Anyway, so bank holiday Thursday tomorrow, so no trading tomorrow, and there's no news drivers on Friday, so really just going to keep an eye on what happens on Friday, have a break tomorrow from the charts, and look for the next week for some better trading setups and better trading environment in total. I will come back and have a look at the 130 opening. We always mark out a 131 opening range gap, or first presented opening range, or first presented fair value gap, that could possibly be used to propel price higher up to the opening range that's still yet to be tapped. Now, looking at this, we've got also a new day opening gap right in the centre, consequent encroachment. So both of these consequent encroachments are overlapping each other. So this could give off, if it reaches this, there could be some valuable PD arrays that may arise from that. Okay. That being said, back on Friday, hopefully we can be more successful in the coming week. Alright, let's hopefully we'll trade carefully.